Hi, Paul Sackers, Good News Planner, speaking to Malcolm Hollensteiner. Hi, how are you?
I'm very well. Paul. Thanks for inviting us on the show.
Well, you were talking about an issue that affects everybody. Home finance expert, that's you, Director of Retail Lending at TD Bank. We're going to talk about, I guess, some of the concerns of the American Dream Survey and home finances and, I guess, recessionary and economic concerns that have challenged everybody, so especially the American dream of owning a home or maybe even staying in it. So what are some good thoughts here?
Well, I think our TD Bank survey showed some very positive trends for us. And obviously, as a country, we're still pulling out of this turbulent mortgage period, but there are definitely signs that the American dream is still alive and well. According to our recent national TD poll, we found that more than half of the consumers polled stated owning a home is a defining element of the American dream. We're pleasantly surprised that U.S. homeownership aspirations are still very much alive, with the majority, over 85% of today's younger renting generation, which we define as 18 to 34-year-olds. They responded that they intend to buy a home in the near future. There's no denying that buying a home is a pivotal point in a person's life. Our TD Bank survey tells us that people are looking to buy homes, and the attitudes towards home ownership have continued to remain positive over the years, despite a lot of the negative publicity that we've witnessed since 2007.
Well, some of that negative publicity, I guess, sort of a little bit was a result of probably people might not have been able to buy a home. And I guess they got some monies that in essence, they couldn't pay back. And I guess a lot of confusion occurred as a result of that. And then the market sank and so on and so forth. So they were really in a problematic situation, right?
Well, I think what's happened is that there's been definitely some myths and misconceptions in the past 5 years as to, how difficult it has become to buy a property and just, the state of the housing market and the state of the mortgage market. And undoubtedly we've gone through and still will go through a tremendous amount of pain, especially in certain regions around the country that have been particularly hard hit. But I think at the end of the day, the signs, our survey shows that confidence remains surprisingly high in the institution of home ownership. And, when we look at some other factors, 25% of the respondents from our TD poll said that they intend on selling their current home to buy up or to trade up. And if you were to have taken this survey 2 or 3 years ago at the heights of the housing crisis, I'm not sure that even 10% of existing homeowners would have been talking about trading up there for a new home. I think probably 95% of homeowners would have been saying, what do I need to do to keep my house, or do I want to keep my house? So that we now have 1 out of 4 existing homeowners that talk about buying their next house. We're moving in the right direction. So that's a very encouraging sign to us.
How does somebody know, if now they can afford a new home? In other words, you have to sell yours, and I guess then there's a question, are you going to make a buck selling your house, or are you going to lose a buck? And then are you going to be able to buy the next house? Is it going to be more than it was, or is that now a better deal based on the marketplace? How do you know whether you're going to be able to afford the next level?
Well, I think staying well informed, will help you feel confident in control of this major financial decision. And finding the right mortgage is all about finding the right financial partner who will help you to borrow smarter. And that's why one of the things that we do at TD Bank is that, we offer a hassle-free mortgage guarantee for home buyers, whether they're first-time home buyers or repeat home buyers. I think the key is to understand what your individual and household and family circumstances are, and what your comfort level is with monthly payments. The great thing about today's market is that home values, because they've dropped so much in the past 5 years, they're now beginning to stabilize. We're also enjoying all-time low historic mortgage rates. Fixed-rate mortgages are available at 3%. so the monthly costs of home ownership, whether you're a first-time buyer or a repeat buyer, monthly costs of home ownership are at a affordability level that has not been witnessed in 30 years. And obviously, the rental market continues in a lot of regions to increase, and rents go up. So the pendulum is shifting from where it was cheaper to rent, now it's cheaper to own on a monthly basis. So that is giving consumers more confidence about entering the market, whether they're first-time buyers or trade-up buyers.
Uh-huh. How about in that the rates are so low? How about refinancing what you do have?
Refinancing is obviously the mortgage industry and the banking industry are enjoying great refinance activity. Customers are taking advantage of these all-time low interest rates to reposition themselves financially and to improve their cash flow. I think obviously on the refinancing side, where there continues to be some causes of concern or problems for borrowers is that in a lot of markets, values haven't necessarily stabilized enough where customers have sufficient equity to complete the refinance transaction. There have been some government programs recently to help that, but you still have situations where well-qualified borrowers may not have enough equity to complete the refinance, unfortunately.
Mm-hmm. How about refinancing and with the mindset of doing an extension, building onto your home, things like that? How does that come into play? Are people doing that?
I think we're seeing some consumers at TD refinance to do additions or remodeling or renovations. I think in general, though, the industry is still seeing examples of where a higher percentage of borrowers, when they refinance, are actually bringing cash in to the table versus taking cash out. So a cash-in refinance, which is a relatively new concept, is where the customer is actually bringing money to the table to help pay down their mortgage balance versus walking away from the table with a higher loan amount and cash out. So I think that probably shows maybe a shift in American consumer credit utilization where Americans are becoming slightly less slightly more debt adverse and want to take advantage of these all-time low interest rates, even if it means they actually are paying down some of the loan balances themselves.
So that's something you need to make sure when you get a loan that you're able to pay it down prior to, say, the 30 years, so 10 years in.
Well, I think for some borrowers
right?
it's important. I mean, we're at TD Bank. We're witnessing a period where approximately 40% of our borrowers, when they're refinancing and purchasing, are taking out 15-year mortgages, which obviously pays your loan off in half as much time as a 30-year mortgage. But that's 15-year mortgage isn't for every borrower. There still is a very high percentage of borrowers who appreciate and desire a 30-year term because of what it does for their cash flow purposes. And we're fortunate at TD because we are a portfolio lender that we're able to provide a unique set of products and underwriting criteria that allows borrowers to maximize the different opportunities that are available to them.
How about if someone took out a 10-year? And
10-year amortizations, 10-year terms are less popular than the 15-year term. Obviously, the 30-year term is still the most prevalent mortgage product in the United States, and then after that, it's the 15-year. But at TD Bank, we've introduced some what we call hybrid adjustable rate mortgage programs, which have met with great success. One of which is a product called a 15-1 ARM, which is a loan that is amortized over 30 years. Yet there's an initial fixed rate of 15 years, and then after 15 years, if you're still in the loan, in theory, the rate could start to adjust within certain adjustment caps. But for 15 years, you get a fixed rate that is below the traditional 30-year fixed rate loan. And borrowers are very excited about that because it obviously helps lower their payments, but gives them also the security of knowing that their payment won't change for 15 years.
Let me add just one other question. I know the good news is the American dream is still alive, so I'm happy about that. Let me ask you just one other, because I know you know this subject, obviously. What's this reverse mortgage? Was there even just something out there that said that that's not a... What's the status on that, a reverse mortgage?
Well, the reverse mortgage product is a product that has undergone a significant overhaul in the previous few years. And at TD Bank, we do not offer reverse mortgages. But a reverse mortgage is a product that obviously, in effect, pays the homeowner for having a mortgage rather than having the homeowner pay the bank. But the issue with reverse mortgages is that they can be an expensive product as far as upfront fees, and I think various government regulators have been concerned with some of the practices that have gone on in that industry. So, although reverse mortgages are still available, the product offerings have been reduced from where they had been a few years ago.
Because I think we have a good senior community listening. That was something that I guess seniors were considering and might not know all about it.
Yeah, and obviously, it's a product that works for certain seniors, and while other seniors, still might want to utilize or benefit from a traditional mortgage for various reasons, as far as lower points and fees associated.
All right, a lot of good information you have there. Thanks, Malcolm.
Well, thank you very much.
Last question for you. What's good news for you?
I think good news for us is that confidence, consumer confidence in owning a house, has remained relatively upbeat despite all the negative publicity and real life, examples of problems that have plagued us for 5 years. But I think we're putting the worst behind us, and at TD Bank, America's most convenient bank, we're very excited about what the future holds for the American homeowner.
Great. Thank you so much, Malcolm, for sharing.
Thank you very much. Have a great day.
You as well. Bye-bye.